Welcome back to Krown's Crypto Cave, and I wanted to preface this next video and explain kind of a little bit about what it is before we get into the content itself, because otherwise it's just gonna, not really flow that well. And basically this video is going over projections for the next market cycle top high and also next market cycle top low using many different tools and fun tools really in order to kind of generate these. Now I want to go into this whole conversation by saying, hey, this is very experimental stuff. This is not stuff that I use to trade on myself or invest on myself, right? And of course it's not financial advice, and this is nothing resembling financial advice at the end of the day. So with that said, we'll go into it right now. Again, this is the more long-term look. We are trying to project or perturb the next market cycle, the next market cycle top and the next market cycle low following that next market cycle top. So with that said, we'll lead into it now, and I will see you in there. Bitcoin on BLX Index does have the longest running history for Bitcoin price action, going all the way back to July of 2010. And we do see something very specific here. Every time that Bitcoin has broken out to new all-time highs on a weekly closure, on a new weekly all-time closing high, I should say, we do see quite nice runs. Starting up with this one right here in 2010 of October, boom, closure to next high, another 462% and some odd change. Then close on new all-time highs right here in January 2011, runs up for another 225%, which doesn't look all that much, but now we're at about $1.14. Hey, not bad. Then close on new all-time highs after here, after a little bit of a short-term reversal, and from top to bottom another 2,800% rally abouts before a few month-long consolidation reversal. Closed on new all-time highs in January 2013. Massive melt up after that. Face melting rally, you could say, 1,300% to the upside before another few month reversal, and then melts up for another in October 2013 that is, for another 640% right there. So after that we get about a year-long reversal, of which Bitcoin once again closed on new all-time highs in December 2016, leading up into the next major massive rally for about almost 2,000% gain at the $20,000 high in January 2017, then reverses for a couple years right here, and then we close on new all-time highs, and thus far we have seen Bitcoin go up about 150%. Now, 150% is fucking phenomenal. It's really, really great, but we have seen in the past that when Bitcoin does close on these new highs on the weekly, well, the lowest read that we've seen thus far is a 200% move, or is actually 225% to be fair. So just playing around with the numbers right here, if we were to take the outlier on the downside for the past prior history, which we have several iterations here, which is actually very much relevant, what would it look like if we added about 225% to this rally? Well, that would put Bitcoin right around 62,500-ish region. That's rather interesting. On top of that, on the upper end, we've seen rallies up to almost 3,000%. I don't think that that's necessarily wise to look at to the upside, just to like really avoid the moon boy discussion. But let me just slow this down a little bit more. But let's just say, we cut everything to middle. We take an average of it somewhere around about 1,000% from prior breakout to next all-time high. Well, that would put Bitcoin, just for reference, in the almost $250,000 range, a little bit lower than that, probably like $225,000. Now, of course, just playing around with numbers a little bit more to put perspective on this, 2,000%, which, we saw actually several of those, would put Bitcoin at about $415,000. And if we were to go down and maybe do like 500%, just a little bit on the lower end, more muted, that would be about $120,000 as well. So you can see these ranges here, and that the percentage of these really, really drastically changes the outcome, which I think is incredibly interesting. Now, on top of that, what I want to go into is something that we discussed yesterday, which is the BLX index and and what I refer to as the matrix. Now, I want to go into this by saying that, hey, this is very experimental type stuff. Do I trade off this? No. Do I think it's interesting for YouTube clickbait bullshit? Absolutely yes. So let's put it on the weekly right here. We'll go over what we went over yesterday in a more streamlined manner as I've gone back and documented everything. So okay, first and foremost, need to explain the actual matrix as we put it on right here. And all of these dotted trend lines represent support trend lines for parabolic market cycles, each and every one in Bitcoin's history, starting off all the way back down towards, you guessed it, 2010, right? And this one's anchored in 2010 of October and also November of 2010. And that becomes your highs after it actually breaks below it in your 2011 and your January 2011 highs, and then your June 2011 highs on this next cycle right here. Then Bitcoin comes back down, reverses for a while, sets in another support trend line for this next parabolic market cycle, anchored in 2011 right here. And and broken in February 2012 right here. That becomes the next parabolic market cycle highs of the next blow off phase in April 2013 right here on this major high, and then once again right here on this major high at about 1100 in November 2013. Then Bitcoin reverses once again, sets in another baseline where we have another anchoring effect, which we do have in January 2015. Going all the way back down, and that gets broken, well, relatively soon after that, it looks like, and that becomes your parabolic market highs in the 2017 segment right here. Then we have another support trend line anchored in this next segment, right around here in the coming out of the 2016-2017 rallies, which becomes potentially our highs for this next cycle that we're working on right now. That has already gotten our July 2019 high after the major reversal after the 3100 lows. And as you can see, going onwards and forwards here, this starts to rise up rather rapidly. You can see, why am I using that fucking tone? That's awful. As you can see, the 3.618 extension, by the way, is at about $6,000. And if Bitcoin were to test that, that actually is kind of around the next measure move for the weekly that we were looking at earlier on this video. So that is actually really good influence right there. But I do want to note that as time goes on, we can kind of come up with a potential high target for this next segment, this next market phase. And while it doesn't look like much because I'm on log scale right here, let's take it off. There you go. Or actually, the trend line's not going to work like that. But as you can see right here, the more that we go further on in time, even just to March, the height of that would be about 71,600-ish region. If we go out even a few months after that to June, it goes all the way up to about $100,000. If we go out just a few months after that to September, around my birthday, we go up to about $125,000. If we go out to the start of next year, January 2022, that would be $200,000. So you can see that this rises rather rapidly. Now, there's something even more important that I want to talk about on top of that, and it is this. So let's go back on over here, and it's all these Fibonacci extensions that you see. So what I've done here is I've taken a Fibonacci retracement and extension tool off of all of these accumulation phases for, well, I wouldn't even say that they're accumulation. It's like vertical accumulation, if anything. But I've taken these these extensions based off of the basing areas for all of these segments. So starting off with this first one in 2010 right here, and September 2010 right here, and I've just found some a little bit interesting that I think is worth talking about. So the retracement starts from here at like 9 cents, goes all the way down to the closure here at about 5 cents, and then you can see that it populates the extensions based off that. And the 4.236 is rather interesting because it becomes the lows of your next cycle. In fact, you know what? I'm going to mark that off with a horizontal ray. Well, should I even do that? Whatever. Yeah, we'll do it like that. All right, then very interesting. Okay, let's continue onwards and forwards with that. So we get this next cycle right here. So I take a retracement from this high to this low, and what do you know? The 4.236 becomes the next low of that next cycle. Very interesting. Let's just mark that one off again. All right, rather nice. Then we do the same thing right here from this high to this low, and that populates 4.236 right around, oh my God, right around like $2.30. And what do you know? That's your low right there in 2011 of November. Very interesting, right? Then we take another one for this cycle right here, starting off with this high and this low, and that populates 4.236 right here. Let's just see where that comes in around. Is that the next low of the next cycle? Yes, it is. Then we take another one. We could take another one for this one right here, although I would argue that this one right here is probably more of a continuation phase than anything, but well, we can come back to that one later. Anyways, we can do the same thing with the 2013 to 2014 cycle right here. From the high to the low, populates 236 at about 3,500. Well, guess what? Where is that? Do you remember where that is? That's your 2019 lows right here. Very fucking interesting. Then we do the same thing for this next market cycle, the one that we're currently in right now. Starting at the high, ending at the closing low. We can actually even rise it up a little bit, but fair enough. And what do you know? The 4.236 is a clean more than $20,000 above where price action is right now, suggesting that the next market cycle low, once this one is finished, is actually going to base even higher than where Bitcoin is right now. It's also kind of in line with this trend line here. So you can imagine that if it does come back into play, does come back into fruition, then that would be, well, I suppose something worth paying attention to, we'll call it. So with all of that in mind, I do like to, I'll put some sort of bullshit title for this video, but basically what I wanted to get out right here is that all these things working together can kind of help out with potentially a long-term investment plan, if you will, like an actual investment plan. Because I actually do think that, you know, obviously you can invest in Bitcoin. I feel just, you know, usually when I'm throwing shade at the fucking investors, it's because people say that they're investors, that they're actually not investors. They're just fucking, it's like the same thing as when people say that they're an entrepreneur and they like sell drugs, you know? I mean, you are an entrepreneur, but well, actually, I have a lot of respect for drug hustle, or, you know, drug guys, because they work pretty hard. I don't know, what would it be like being an affiliate and be like, I'm a business representative, or I own a business and I work for a fucking MLM company. How about that? Yeah, there you go. All right, so that's what I'm saying right there. That's typically what I see from investors. But you know, of course, there's also some very sophisticated investors as well, which we even have some in the Discord, which are actually pretty interesting to listen to, even though we have completely different, you know, styles. I actually do find a lot of value in what they say. Anyways, and they probably know who they are. Anyways, looking at this right here, so I do want to get that information out, not because I would put my fucking life and ballsack on the line for that, but because I do think that, well, you know, I'll just present you the data and you can make the decisions for yourself, as you are very likely a, you know, well-adjusted human adult capable of making your own decisions. And perhaps this might help with such things. Of course, not financial advice. I'm not a financial advisor, blah, 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 blah. But, you know, with potential high of, I mean, it's not necessarily that we have a potential high for this next cycle. You know, we just kind of went over percentages where that might make sense based off of prior cycles. You know, anywhere between like, let's just say on the lower end, 200,000, and on the upper end, like 600,000, if we were to use a 3,000% region. You know, that would be very interesting when you kind of consider the range of, like, let's just say $200,000 down to $70,000. I mean, I'm actually curious what sort of a percentage drop down that would be if that were to happen. Let's see what our tool says right here. So that's 2 million. Okay, so that's a little bit too much. Let's see what okay, so let's just see. Oh my God. All right, so let's take this one step further. Okay, so let's okay, we're going way out into fucking loony bin right now. By the way, I want to be very fucking specific with this, because if people are new to this channel, they probably don't understand that this is like not usually a big focus of this channel. This is all for clickbait, YouTube bullshit. But basically, if we were to just postulate a target based off of prior historical runs up to about, you know, somewhere north of $200,000 on this next cycle, and then with the assumption that the next base scenario is going to be around $70,000, that would be about a 66 and a third percent drop down. That's very fucking interesting as well now, isn't it? Because guess what? On each and every one of these fucking market cycles, well, I'll just show you. All right, what's this first one drop down right here? About 50%. Okay, interesting. What's this next one right here? Let's see, about 62%. That sounds familiar. What about this next one right here? That's another 50%. Kind of in the ballpark. What about this one right here? 80. Okay, that's a 90% drop down. That's quite aggressive. That's a lot. A little bit on the outlier side, you might say. Closure to closure right here, another 50%. I'm curious what it looks like on wick to closure though. 70%, so a bit of a range. 60 would be right there in the middle. Just interesting. What do we have on this one right here? From top to bottom, it's going to be about 77, but there's actually two segments right there, but yeah, 77% right there. Interesting. Then we have this next one right here, which we saw in 2017 high, and that's about an 84% drop down right there. First phase, by the way, was about 70, yeah, right there. And then second phase was this one right here. That's another 55. That's actually a little bit more how I'd relate this one right here as well. You know, 62% right there. Very fucking interesting. Then here's your bull trap, and there's your next fucking cratering effect. So it's another 64%, 64.5%. Anyways, my point is that that would kind of be within the context of Bitcoin's history as well. Now, there is that great saying that history isn't like, it doesn't repeat, but it rhymes. And that would be a fucking rhyme, man. That's a goddamn Bitcoin rap right there, if anything. Alrighty, so following back up on this, I do want to add into this whole video a few things that we have come up with recently, as well as some new indicators that have further, well, Well, you'll see for yourself. So with that said, we're going to go back into it right now. And what I want to present to you is the Pi cycle top indicator. Now, the base indicator can be found on TradingView for free. I think there's several of them. The one that I'm going to be using today is this guy right here. It's going to be the Pi cycle Bitcoin top indicator from Noriego. Very, very useful, and will populate these two moving averages on your screen. Now, the Pi cycle top indicator, without getting too girthy into the description, is essentially an indicator that is used in a bunch of different moving averages based off of pi numbers that have in the past gotten Bitcoin's last few macro highs. Now, of course, because these are moving averages, they have only really started populating accurately since about 2012. So this first indication over here is actually a long indication to begin with, so it's not even relevant to the conversation, but we didn't get anything before that. But as soon as it started firing off the sell signals for them, it has actually gotten every single market cycle top perfectly since, I suppose, 2013, as you can see right here, where we do see the actual cross about 3 to 4 days before the actual all-time high is put in. The cross happens on the 6th of April, and then 1, 2, 3 highs put on the 4th day. So about 4 days after that one, pretty damn relevant. On the next one in late 2013, early 2014, we do see that the cross happens right here, and that actually does happen on the same day of the actual high being put in as well. Now, next one on top of that, we can go to 2017, 2018, and this one does call it within about 2 days. Yeah, crosses right here, it looks like, then 1 day, 2 day, and then top is put in. So whenever we've seen this cross over the last now, I suppose, 8 years, we have seen a Bitcoin macro cycle high precipitating before the next 70% plus drop off put in. And that, well, let's actually just measure these out to make sure. Okay, let me just first off take off this. There we go. And this first one right here, yeah, about 8% drop down. Not bad. This one over here, first move, 64%. Overall move from top to bottom, 86%. And when we go to 2017, 2018, you can see this first move right here was about 70%, and then ultimate move was about 84%. So pretty consistent within that behavior right there. Now, Caretaker has actually gone ahead and made a reverse function for this, which shows us the price that would be needed for Bitcoin to be at in order to cause the bearish or cycle calling top. Now, with that in mind, first I'll show you actually where to get this one. You can just go to your go to the public library on TradingView and type in CT reverse. Probably even just pops up after this. Yeah, it's actually right there. Reverse Pi cycle top indicator. So there you go. Anyways, with that in mind, you can grab this for yourself. I'll actually have links to both these, both their work in the description of this video. There's also several other ones as well. But what I want to show you now is the relationship that I've been looking at to kind of judge not just when the next market cycle top is likely, but also at what price point, and also, well, I suppose a leading indication of when. So, as we go back into it right now, the further away that the reverse function is from price action, essentially the better for a healthy long-term upcycle market. Obviously, you know this. Obviously, you want this as far away as that's what's going to produce a cross. Typically speaking, in general healthy upside markets, we see that the reverse function is about in the upper 90s actually away from price action. And I'm specifically taking this as a drop down from the top, from where the reverse function is to where price action is. So keep that in mind. You will notice that obviously when you see the reverse function converge in on price action rather rapidly, it gets to a critical mass essentially. And that's when, well, that's when things just crater in incredibly fast. And you can see that when this comes down, it comes down at an exponential rate. It's like a fucking freight train is what it is. So when we look at it like this, what we can see is that once this gets, and let's say it break kind of like its low structure right here, if you're looking at this from a trending perspective, so you're technically in a downtrend on the reverse function, if that makes sense, at this point right here, that is still about a week to 2 weeks before the ultimate high is put in, but now we're starting to get about 90% away. And as you can see, when things really start to come down and you're in like the last few days of that rally, I really need to like zoom in on this one. It's about at the 80% marker. It's about right here where, well, that's actually about 50%. But even before then, if we take it from this region right here, and we take it down to where price action is, it's about at the little bit less than 80% region where things start to really rapidly converge in. And while technically speaking, the market is still bullish and we still have, 1, 2, 3, 4 days left of rally, the rally is very much in jeopardy at that point. So it's kind of like a warning signal. Hey, we're about to see a parabolic blow off top. After that, pull your pants down, get ready, right? So if we can extrapolate that into the next one over here, we can see that there is, there's a bit of a rhyme and a reason to this as well. So for the most part, rally is nice and healthy and stays, taking this the wrong way around. Rally stays, very far away from this level, about 98% as you can see. Nowhere near, then starts to creep closer and closer. Over here, we get about 92%, 92.5%. So it's very minute changes until it just it's catastrophe. This one about at the 70%, low 70% marker. That's when the high is, or the top is imminent. You can see that the next 1, 2, 3 days puts it in. Moving on to the next one in 2017, I believe we're in now. By the way, the long signals for this are not anything that I'd pay any attention to at all. I think just a quick back test would very quickly verify that. In 2017 rally, we do see, for once again, the majority of the rally stays about in the upper 90% away from price action. But once we get to this area right here, where it actually starts to break that higher low structure, we do see, boom, this one's about 76% to the 76% away. And then within about 1, 2, 3, 4 days, high is put in, and you get another 80% drop down over the course of the next year and a half. So all of this is very interesting, because we can now backwards engineer it and know exactly where that price point is. Where is that price point as it is right now on this day of the 17th of the month of February in the year 2021? That is a little bit above $1 million actually. So is that, is that relevant for any of the rally right here, right now? I'd say unlikely, because if we take a percent drop down from this, you can see that that is about 95% away from the current price action, which, as we've seen, that's not really when the rally is like all that problematic. It's once it gets a little bit below 80%, it seems, where the drop off is like very imminent within the next week, maybe 2 weeks at most. And in this case right here, we can actually obviously forecast a percentage where that number would come into, fruition, right? So let's go in with that assumption. So we're making a big assumption right here. I want to be very, very clear about this. I'm making a major assumption with this. But assuming that historically this is relevant, and we're getting into very experimental stuff right now, by the way, just want to get that on the table. As you can see, we can start to make we can make some sort of a function between those percentages. Jesus fucking Christ, man, that goddamn typing. So fucking annoying. Anyways, what we can do right now is we can see from where the reverse function is to where price action would be needed to be around that 75% region would be where? That would be at about $250,000, which is rather interesting. Let's see what it would be like at about 80%, which is kind of like the major warning signal, I'd say, where it's like, all right, a couple weeks or less. That's at about $200,000. Let's see what 85% would look like as well, just because, I'm still not completely sold on all these numbers just yet. But as you can see, that would be at around $150,000 as well. And you'll notice that all these numbers are pretty damn consistent with what we were looking at earlier when judging future forecasts into the market cycle top high. So it really actually does look like a potential high of anywhere in the $200,000 to $250,000 region is somewhat reasonable, actually, historically speaking. Am I just blindly looking towards those levels myself? No, this is again very experimental stuff, but I do think that is rather interesting. So with that in mind, we actually do have multiple things now confluent at those levels, and I would keep an eye on this indicator. It's going to be one of those indicators where you just kind of throw a few alerts on and then just reference over time, because as you can see, it's not in any danger of happening right now, but when things do get below, especially the 85%, and then of course the 80% levels, that's when it's it actually, to use a bad cliche, imminent in this case. So I would keep an eye on this one. I think this is about where I want to leave off this video as well. And if I decided to add anything else to this more long-term analysis, I will just update this as I go along in its own sort of unique playlist. And with that said, I want to wish you well. I'll see you in the next one. Take care.